For the last 3 consecutive sessions, you've seen some steady flows coming in despite a strong dollar. So, yep, I don't think there is anything denying D-Street's rally. In fact, over the last 1 month, we've had a good 2% move, Nikunj, as opposed to the Dow, which has just barely done anything, was down about 3/10, or for that matter, other markets like a FTSE, which were down actually 2%.
Okay, we are in a range, we are consolidating, but nothing wrong with it.
Yeah.
We've had patches of few months of consolidation.
And we've outperformed the rest of the globe as well.
You're doing very well for yourself. I think there is no reason why anybody should assume that we've reached the end point of the rally. This market is running out of steam. What is the next trigger? No. I think, say it again, the best part of the summer rally of 2023, I think, is not over. Let me establish that slightly further. Look at the market YTD, which is what's happened to year to date. And you're up about 2%. The small and the mid cap index during that same time, they are up 7 and 8% respectively. Now that's a very commendable feat for individual, for the broader market, that for this year you are up 7 to 8%. Now, Nifty is almost at a new all-time high. I'm discounting that 2%. The mid-cap index is almost at a new all-time high, but the small-cap index is nowhere close to its all-time high, which means that the froth in the market, the more you go down when it comes to the penny stocks, the HNI dominated stocks, stocks which go up largely because of demand and supply, not because of fundamental factors, stocks which always end up adding, which always rally in the tail end of a market cycle. That market, I think, is nowhere close to the valuation levels or participation levels what we saw in 2021 or early part of 2022. So what makes me confident that the best does not come is because 5 days of consolidation and everybody is saying that, okay, the best of the gains are over. It's not going to happen this way. B, where is the participation? Yeah. C, the small and the mid cap stocks are not at an all time high, and they are the ones which always are this canary in a coal mine. I use this phrase very loosely to say that the canary is an indicator of what is going to happen in a coal mine. Small and mid cap stocks are an indicator to what will happen to the market rally. They are not fat, they are not obese, there is no participation.
Yeah, and even if you just look at the construct of what the market has done this year, like Nikunj was saying, the mid-cap index has put on a good 8%. By the way, the mid-cap 100 index is already at a life high. The small-cap index is up 7%, and equation to that, the Nifty is higher by 2.25%. So clearly seems that there could be more legs to the rally. Even if you were to look at the gainers from the March 29th lows, it's ITC, which has surged about 72%. It's M&M, which is up 82% with the stock now at 1400 per share levels. Eicher Motors, Britannia, and yes, there is an IndusInd Bank, but there is no HDFC Bank, there's no Reliance Industries. All those names are yet to participate in the rally.
Yeah, you're right. In a market when the flows are reversing, and when flows are reversing largely because of ETFs and largely because of money moving out of China, you would say that the three horsemen, what are the four horsemen on the Nifty? You've got Reliance, you've got HDFC Bank, you've got Infosys, and you've got ITC. The three horsemen are just not participating. It's only the ITC, it's only the juggernaut movement in ITC which is which is standing out. So it's not going to last because flows are coming at a global level in terms of an asset allocation. Second, if these three stocks do not participate, then our market's telling us that the new leg of leadership is starting. Will that new leg of leadership this time be slightly different than what the previous leg would be? The outperformance would be slightly different. That only time will tell. For example, in 2021, when markets came off from the COVID, massacre, Reliance led the rally. No other stocks were participating. It was single-handedly one horseman which was taking the markets higher. So
and
maybe
that do it alone because of the weightage it has on the index.
The weightage it has.
Yeah.
So the markets cannot, these three stocks in a strong ETF dominated global reversal market where money is coming from China into India, these three stocks cannot stay disconnected for a long. And that gives me hope, and that gives me a bit of a belief that it's a matter of time that one of the stocks is going to take off the block.
Okay, just also walk you through what the global setup looks like this morning. And largely, you've got the US markets, which wrapped up in the green, and that was led by financial stocks as well, coming in across the board. Lots of results as well coming in at the fag end of the earnings season, but a bit of a flattish close with a mild positive bias for the US markets. For Asia, it is looking a little bit mixed as you've got, primarily most of the markets that have gotten off in the mixed region. You've got the Reserve Bank of Australia that is going to be watching out for commentary coming in from there, and as well as China's May trade data. So that is all as well going to closely be eyed. Oil prices as well, you've got a little bit of an ease coming in this time around. They've eased about 1% or so, and that's largely on the back of the fact that the global economic growth could reduce energy demand, and that could outweigh Saudi Arabia's pledge to cut the output costs. But Nikunj, as we were talking about as well, when it comes to the broader market, because where the leadership has been, you have seen a strong outperformance. Stocks that have led within the mid-cap space include the likes of an Aurobindo, CG Power, Paytm as well on a year-to-date basis has gained about 35% as well. So while we are facing resistance around 18,600, are these indications of a breakout as well?
Avansi, what is the big change in terms of the market template? The change, if you frankly ask me, which has changed, which is there between 2022 and 2023 is that interest rates have peaked out, commodity prices surely have peaked out, and flows have reversed. Now, typically when interest rates they go higher, growth stocks they underperform, and growth stocks in 2022 had become obese, and they went through what could be called as a serious adjustment. Now the reverse trade is at play, so commodity consumers have started outperforming. Growth stocks, which is largely internet companies or fintech stocks, they've started making a comeback. Stocks like Paytm and Zomato, they are now finding they are also occupying center stage, largely because some of the promoters have realized that look, the way forward to survive in a listed market is that you have to commit to the path of profitability, and you have to be extremely conscious of cash flows. So there are a lot of factors which are at play when it comes to some of the some of the laggards and why they really have become the leaders. But for me, the construct of the market is still centered around the following facts. Valuations are not that expensive. Growth has surprised us. Commodity prices are benign, and interest rates has topped out, and flows have reversed from China. When you see a potent combination of that, all these factors in a sense will ensure that in the near term, in the near term, the market outperformance which is here is not only real. I think it's also here to stay. I started the show with this, and I'll say it again. I will thumb the table again and say that the best part of 2023 summer rally is not over.